$50 per share. Is this finally happening? Palantir just shocked the entire community. The stock exchange just proved $50 is not just possible, but already reached. All this craziness happened in the last 24 hours. And this seems like just the beginning of a bigger wave. But what is actually going on? Well, let me explain. Disclaimer. Palantir's recent inclusion in the S&P 500 has been all the talk in the tech sphere. They did what others thought was impossible. And with this, they also caught the attention of several investors. This has also triggered a surge in demand from institutional investors. Big funds and firms are now looking to increase their positions in the company. And this might not be a surprise to most. After all, these institutions are always after stocks that might make it big in the future. And they have all the funds in the world to wait out Palantir's growth no matter how long it would take. This push is giving Palantir's stock a strong boost, as these institutions typically need to buy large amounts of shares when a company gets added to the S&P 500. Just consider this. There are about 1,300 institutions that hold Palantir, but they hold almost 900 million Palantir shares. That's such a crazy ratio, and they want more. It's a significant moment for Palantir, and the ripple effects are already being felt across the market. Here's the problem for retail traders, though. They usually don't have the time nor the funds to make big profits, which is why swing traders and profit takers are looking to sell off some shares, making those available for institutions to scoop up. I mean, it can be understandable for them to sell immediately if they want to make a profit, right? But here's where things get interesting. If retail investors decide to hold on to their shares and not sell, the supply of Palantir stock could become much tighter. When there are fewer shares available to buy and more people wanting to get in, the result is often a rise in the stock price. This is why some are predicting that Palantir's stock could continue to climb if retail investors hold firm. For traders, this is a crucial time to monitor the volumes closely. If large institutions are actively buying, it will show up in the volume of trades. Big movements in volume could signal when the buying pressure is heating up. It's important to watch the numbers, as they can often give clues about what's happening behind the scenes. For retail investors, this could be a chance to sit back and enjoy the show. This is if they are willing to hold on to the stock. While some sellers may rush to cash out, hoping to lock in gains, those who hold their shares may benefit from a tightening supply. As the saying goes, patience is key. It might be a good time to grab some wings and watch as sellers scramble, potentially missing out on bigger gains. However, this isn't likely to be smooth sailing. If institutions are eager to get their hands on Palantir shares, it could lead to a lot of volatility in the coming weeks. It's going to be a bloodshed. You know how institutions can be if they want something. Prices could swing up and down as buyers and sellers battle it out. It's going to be an intense period, with plenty of movement in the stock, especially if those big players go all in to secure their positions. But for those who are planning on holding on to Palantir, there could be good news for you. The 2027 options for Palantir are now available, giving investors a new way to bet on the company's future. And this news is exciting. According to a user on X, it looks like the highest strike price is set at $50, which has caught a lot of attention. This is a big deal for Palantir holders because options like these are often seen as a sign that there's a lot of optimism about where the stock could be headed in the coming years. For those who might be considering jumping into these new long-term options, it's usually smart to let the market settle a bit first. After all, the risk is always there. When new options like this are released, they tend to be priced high at the start. That's due to the initial hype and demand, making them more expensive to enter. Over time, the price discovery process will help determine a fair value for these contracts, and that's when it might be a better time to get in. But with how Palantir is doing, there might be a chance that they'll hit the price target, or maybe even higher. This is a positive development for Palantir. It shows there's belief in the company's long-term growth potential. With a little patience, the situation could improve even more, and investors might find better entry points as the market for these options settles down. After all, these are just people predicting where Palantir could go, and they aren't always accurate. However, analysts might support this price target. They see Palantir as a company that's going to do well in the future. And while most people think it's going to be because of their products and offerings, they see something else about the company. And here's what's interesting. Everybody else sees this as unorthodox. And this is a huge misunderstanding about Palantir as a company. One major misconception about Palantir on Wall Street is how the company handles its sales strategy. Unlike most companies that rely on traditional sales teams, Palantir takes a different approach. They do sales with their engineers playing a key role in closing deals. Some investors have argued that this method limits how much the company can grow, and that it makes it harder to be profitable. But Bank of America has a different perspective on this. According to a recent note from Bank of America, this hands-on approach by Palantir's engineers actually strengthens the company's offerings. The engineers don't just sell the product, they work closely with customers, understanding their needs deeply and tailoring the solutions to fit. Imagine buying a car and talking to the one who engineered it. That's such a huge game changer. They believe this gives Palantir a huge advantage, allowing them to price their products higher because they're more valuable and more relevant to the customer's mission. As Palantir continues to gain customers across both the public and private sectors, Bank of America sees even bigger opportunities on the horizon. They believe Palantir could eventually become the go-to data operational system for the U.S. government and large U.S. companies. They're still not there, but are on the path to be. This would open the door for Palantir to expand its reach and cement its place in the market for years to come. This sales strategy, which many see as unconventional or inefficient, might actually be the key to Palantir's long-term success. By putting their engineers at the forefront, the company is building stronger relationships with customers and delivering products that add real value. So, while some people see it as a weakness, it could be the secret sauce that sets Palantir apart from its competitors and drives future growth. In fact, analysts see Palantir as one of the stocks to be a good buy. And here's why. Palantir is increasingly being recognized as a hidden gem in the AI space. People used to not know what they did. But after their astonishing growth, they're now interested in what Palantir brings to the market. As you may know, the company has quietly become a key player by helping businesses develop and implement custom large language models and other AI tools. Its artificial intelligence platform has emerged as a major competitive advantage, giving it a strong foothold in the rapidly expanding AI market. Management has been quick to capitalize on the growing $600 billion AI opportunity, closing 27 deals worth over $10 million in Q2 2024 alone. But this is just the start. In addition to its AI capabilities, Palantir has shown strong growth across all segments. Last quarter, the company's U.S. overall customer count jumped by 41%. This increase translated directly into financial success, with revenues rising exponentially. And here's what's even more interesting. Palantir is now considered one of the must-buy growth stocks, with 44 hedge funds holding positions in the company as of Q2 2024. Renaissance Technologies, the largest shareholder, holds more than $1 billion in stock. Overall, Palantir ranks high on the list of analysts of unstoppable tech stocks to buy. While we're optimistic about Palantir's potential as a long-term investment, analysts believe AI stocks in general offer an even greater opportunity for quicker and higher returns in the near future. However, always take these predictions with a grain of salt. Analysts aren't correct 100% of the time, and it's your money you're investing, so do your own research before doing anything. So what do you think about this? Let us hear your thoughts in the comments. If you are curious to find more, then make sure to click on one of the videos you see on the screen. And with that, we come to the end of this video. If you enjoyed the video, please like this video, and don't forget to leave a comment in the comment section. This really helps me with the YouTube algorithm. Also, please share this video with as many people as possible. Let's get this news out there.